Splendid evening it is to you viewers. Welcome to Equity News on Equity Access, your aerial perspective of stock market developments and of developments in the Zimbabwean economy. Ibn Mabunda signing in. Let's get on to business. Well, today we start by having a look at what actually transpired during the course of the week. Then we get into the details that we have for today. Well, on Monday, we saw Mashonaland Holdings holding an annual general meeting with a trading update being given, indicating a growth in revenue of 7% and expressing expansion strategy into student accommodation as well as hoteling. Then we also had a look at the performance of the corporation over the past few years. They're coming from a net loss position of about $5.94 million, and in 2017 $1.57 million, then and then the next season, which is 2018, they recorded a profit after tax of $2.39 million. Then also Standard Bank Group, which wholly owns Standard Bank, shuts down 91 branches in South Africa and retrenches 1,200 workers or employees in that regard, in a move toward digitalization. Could that also be coming to Zimbabwe, where Stanbic has over 20 branches and 650 employees? Then the day that ensued, then on the same day as well, we also saw Citco International, which is a spin-off of Citco Limited, which is listed on the Zimbabwe Stock Exchange, releasing financial results for its very first financial results since it was separated from its parent Citco Limited. So according to the financials, they recorded a loss, but of course this is in line with the structure of the financials, because in the first half of the financial year they record losses, so this is quite seasonal. Then in the second half of the year, which is from January right up until June, that is the period where they actually record much of their revenue, and that actually adjusts their financials. On Tuesday, Alrosa, which is the world's largest diamond producer by output, raking in 27% of the world's diamond output, says that they will require a 51% ownership in its Zimbabwe's operations. Well, of course, at this point, government is yet to allow foreign investors to own more than 51%. And in a statement, chief executive says, of course, we'll only be ready to participate in projects in cases where we can have management control and operational control of the assets. This as Zimbabwe seeks to increase its diamond output in that particular sector. Then Australian listed Prospect Resources, with investments in Zimbabwe as well as DRC, releases financials for the year ended 31 December 2018. Key to the financials is the fact that they recorded a loss position of $2.9 million, a 57% growth from a loss position of $1.9 million recorded in the comparative period last year. Much to do with much of investments in its Zimbabwe's operations, particularly the arcade project here. Well, the corporation is heavily invested in that, and due to the exploration as well as investments taking place in Zimbabwe, that has yet to actually produce results. So very much positive expectations to be expected as we move forward. Meanwhile, Cyclone Idai holds up Zimbabwe's wheat supplies as Zimbabwe continues to grapple with wheat supplies of late. Then Potras releases a report of the performance of the postal as well as telecommunications industry. Well, positive news is that internet penetration reaches 62.9%, mobile internet and data consumption in 2018 growing by 77% to 15,361 terabytes, from 15,361 terabytes to 27,287 terabytes in 2018. Then liquidity challenges affecting our transactions across the country, growing from a position of $772 million in the first quarter of 2018, scaling right up to $1.4 billion, nearly doubling that. This, of course, is due to the monetary policy statement released on the 1st of October by the Central Bank Governor, Dr. John Mangunjika, then the largest dairy producer in Zimbabwe, Dairy Board, also releases financials for the full year of 2018, and they record a growth in revenue of 28% to $126 million, while the profit after tax also scales 231% to $5.78 million. This, of course, being usually contributed to by the beverages unit, which contributed 44% to the revenue performance of the group. On to Thursday, Total Zimbabwe, one of the key players in the fuel supplies, releases a statement that could perhaps tell us what to expect in the next few weeks. Again, the cyclone, they're affecting our fuel supplies, and they say, according to the statement, that the condition of pipeline from Beira to Zimbabwe is yet to be established, and we still await NOIC update on the scene. However, it says, given the above, the stock tank in Masasa may not be replenished in due time as required, and this is likely to put pressure on the supply chain. So Total has over 40 chains of over 40 supply centers across the country, so perhaps this could be an indication of what to expect in the weeks to come. Meanwhile, AIM listed Caledonia, with a controlling stake in Blanket Mine in Gwanda, posts a strong performance at Blanket Mine despite challenges in the economy. Steve Curtis, the chief executive officer, says the statement. He says, policy changes disrupted the commercial banking system in October 2018 and February 2019, which adversely affected procurement. So despite harsh macroeconomic setup that the corporation has had to operate under, it still was able to record a positive performance in terms of the gross profit as well as a profit after tax, despite decline in terms of its output. There's been, of course, a decline from 1.59 tons recorded in 2017 against 1.55 recorded in 2018. Then ZSE extends the financial reporting deadlines from the 1st of March to the 30th of April in the face of currency issues, as well as against the background of the reporting setup. Well, with several companies actually releasing financial statements, while one or two companies have indicated that they could not publish their financials due to issues to do with the all kinds of setup. Particularly, TSL has said while the financials are due, they would have to be delayed. And as follow-up to that, we have a situation where today, the Public Accounts and Auditors Board has released the much-awaited financial reporting guidance on currency consideration in the just ended 2018 as well as the ensuing 2019 financial periods. Well, just to make a bit of extracts from that, it says that in its guidance, the PAB said that since there was no official and legal 22nd of February 2019, the presentation currency of most entities in the country is expected to remain as the United States dollar as of 31 December 2018, and for the year then ended citing statutory instrument 33. Well, basic story is, well, in 2018 we said that there was parity between the then surrogate currency, the bond, and the United States dollar. So if that was the case, then it says that, well, all the financials should be published in US dollars. Well, that's it for tonight from the news side. Up next is Anisu Chumbumu with the money markets. Please stay tuned. Good evening, Anesu.
Hi,
And welcome
Eben.
to the show.
Thanks, Eben. How are you doing?
Can't
Evening,
want
viewers.
complain, you don't get better.
Well, why wouldn't you?
Fantastic. Let's cut to the chase. What was the performance of the stock markets today?
All right. Today the stock market was pretty damp again. Second day, actually extending on its losses from yesterday. All share index was down 3.53 and the industrials was down 3.58%. For the all share index to settle at 121.56, while the industrial was at 404.89 points. The mining's index is still stable again, 7th session running now. Top 10 index down 4.48%. Pretty much courtesy of about 5 counters on the top 10 index that have come off. Well, your Econet, Cassava, and Inscore were the heavy hitters today, coming off by 9%, 9.11%, and 8.33% in that respective order. Now we'll just have a quicker, just have a 5-day review of what's happening. So basically, like you saw in the previous slide, we have noticed a huge dip in our top 10 counters, much to do with a lot of investors trying to find some liquidity, and also having come to a point of realization now that the money that they thought they could probably play around with in the interbank market could be a little bit difficult for them to deal with. So you'll find that they're somewhat now coming back into trading with Old Mutual so that they can get their money out of Zim through its fungible characteristic. So you notice that the top 10 index, like I was going to mention at the beginning, is down by about 11.83%, while the all share index is still down by 9.09%. So which shows you that the top 10 index is pretty much very damp, which is the big drag that we see around about here, giving us year-to-date losses of about 16%. The top 10 index is down 21%, but then Padenga is the only company that is still floating in the green on a year-to-date basis. Moving on, we have and about 11 laggards. Evidently, Masimba was the only riser of the day, coming up 6.17%. Dawn was down 20%. First Mutual was down 19.53%. First Capital down as well, 11%. Cassava extended on its prior session losses for it to settle at 100 cents. That's the one that I mentioned had come off by 9.11%, while Econet has settled at 100.02 cents as well, after having come off 9.09%. Now, with how a lot of expectation had come with the forex market actually coming to a place where it weakens, mostly because of the tobacco season. Right now, it's a little bit too early as well, because some farmers have not yet actually gone to the floors, mainly basically because the prices are still a little bit damp. Today it was around about $1.46. Actually, yesterday's trading price, average trading price, was at about $1.46 US dollars. Now you notice that with the regime that was put about the RTGS dollar being paid straight into the farmer's account, it has somewhat kept the markets pretty firm, actually causing for a 1% weakening on the interbank market on a day basis, for it to settle at about 2.94 times, while the Old Mutual implied rate and the parallel market have somewhat come to a place of convergence, with the Old Mutual implied rate trading at about 3.78, while the parallel market is at about 3.8, which is pretty much an average between the cash rate and the RTGS rate.
Well, the interbank rate continues to weaken. If you just have a look.
Yeah, but the marginality is pretty much going to stay almost the same between the two, because I mean, with the parallel market knowing that without much knowledge of how much the parallel market can actually, the interbank rate can actually wipe them out of business, they would rather keep their premiums well above the interbank rate, so that they can stay a little bit more competitive. Because as of late, we actually don't really know how much money is circulating in the interbank rate in terms of volumes that are being traded and the like. So you wouldn't know how much of the supply is there for people to be demanding. So evidently, with the rate weakening, it shows a little bit of a little bit of more demand rather than supply, and which pretty much has caused for the price to.
But now with the tobacco selling season actually beginning to gain some momentum,
most of the US dollars would have come in already. Most of the US dollars that do come in would have come in already, because I mean, contract farming would have received most of the payment prior to them reaping, and then after they do reap, they will then get a portion as well, probably like a drawdown, where they, according to how much they would have actually yielded. But then pretty much most of the US dollars, according to contract farming, would have come into the Zim coffers, which is supposed to be now used as drawdowns for the farmers.
Well, thank you, Anesu. Thank you, viewers, for staying with us. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our website, www.equityaccess.net. From Anesu and me, thank you and good evening.